When it comes to depth and liquidity of African capital markets, there are participants in a survey that were not quite satisfied with where things are. This is according to the third edition of the African Financial Industry Barometer, which is a collaboration between Deloitte and the Jeune Afrique Media Group. Now, the survey addressed to the leaders of financial institutions sheds light on Africa's efforts towards building a world-class financial industry. Now, we're joined from Paris by Ramatoulaye Goudiaby, who is a director, AFIS, and the Jeune Afrique Media Group, to discuss the report. Good morning to you, and thank you so much for joining us. So, just to dive in, per the survey, about 48% of players in Africa's financial sector believe the sector is attractive, but that 48% dropped from 61% in 2022. Why the drop?
Thank you for having me this morning. Well, as you mentioned, we have nearly 50% of our financial industry players that believe that the African financial industry sector is still attractive. And this is right, actually, as our continent still presents ample opportunities for growth and investment. And I will give you three examples, among others. Like, first, Africa is abundant in natural resources, such as oil, minerals, and agriculture products. This richness will present opportunity to financial institutions to provide financing for extraction, processing, and distribution, thereby stimulating the economy. Secondly, infrastructure development remains critical needs across the African continent, and the financial institution can play again a role in funding infrastructure such as roads, ports, energy, etc., contributing again to economic development and improving living standards. And the third point I wanted to emphasize, which make the 50% still thinking about the attractivity of the continent, is that we have the proliferation of the mobile technology, and Africa is leapfrogged traditional banking models and leading to the rise of mobile money and digital banking solutions. Therefore, the financial institution had the opportunity to leverage technology to reach undeserved population, increase financial institution, and drive efficiency in service delivery. However, and as you mentioned it, we have a drop as for the perceived attractiveness of the continent, which has been severely impacted by economic and political turmoil, unfortunately, in the western and central regions, mainly Burkina Faso, Mali, Niger, Gabon, and recently in Senegal. This combined with, I think, the drop of the Naira, for instance, or the Cedi, up to 90% of their value against the dollar, has created a lack of confidence and a reduced willingness to invest in a risky region.
Now, speaking of risks, I'm glad you ended on that. I want to ask you about, again, taken out from this survey, high risks facing Africa's financial industry. Top of that list, according to the respondents to your survey, 60% said political, social instability. 59% said cybersecurity. 54% said hawkish central banks. And we've seen a big rate hike in Nigeria. We just saw a big rate hike yesterday in Egypt. We've got a number of elections this year in South Africa and so on. Is the fear of political instability justified, even considering the coups across the Sahel?
Yeah, I think this is justified, and we have seen the rating agencies such as Moody's, Standard & Poor's, and Fitch, which has recently upgraded or downgraded some countries, because the political risk is the main reason of these upgrades and mainly downgrades or stable rating for the sovereign. So yeah, the political risk is justified, and it will have an impact on the ratings, the internal ratings of some corporates or some financial industry, as we know that this is correlated. So yes, this is justified, and we've seen how it has make an increase in stability in the WAMU region with the exit of the CDAO, of the Niger, of Mauritania, and as well as with Mali. So it has reduced the liquidity in the region and capacity for the capital market players to raise liquidity on the market. So this is justified.
Now, I want to ask you about a question that was asked about the technology ambitions of players in the sector. As far as the respondents, what their tech ambitions are, we've got 33% saying projects related to cloud computing, 31% e-learning platforms, 25% collaborative work tools, and then internal trading. Will these ambitions pay dividends for the players in the financial sector?
Yes, actually, the continent's financial players are confirming their technological ambitions, and they have launched, as you said, and accelerated several projects that you mentioned earlier. I believe, and as a teacher as well, that when a financial institution invests in those projects, it's because they are deeply convinced that investing in those tangible and intangible assets will generate future economic benefits and therefore pay dividends. I will just quote one of the leaders that respond to our survey. And he said that the company that is directing is convinced that the integration of artificial intelligence, into their operation is a crucial step to stay at the forefront of innovation and enhance the overall experience of their clients. In their digital interactions, what he said is that they plan to leverage in AI to optimize the customer experience across their platforms, such as their websites, such as mobile applications and online service platforms. And he said that this will enable increased personalization and responsiveness, providing tailored communications and recommendations adapted to the specific financial needs to each client. So this is critical. AI can also play, and this is what he said, a crucial role in improving security by detecting and preventing fraudulent activities, thereby ensuring their clients' trust and products. As for training, for me, education, this is what we talked about during AFIS. Education is key. And it's not because we have left our studies maybe 20, 30, 5, 10 years ago that we don't need more education, because technology is improving. So we have to be in line and to understand the improvement in the technology and the improvement in the regulation, etc. So education is key, training is key, and it's continuous throughout our professional career.
I guess we had a minute to go. So if I was to ask you the main takeaway from this survey, how would you summarize the main takeaway?
The main takeaway is that what highlight this survey is that we have a resilient a resilient financial industry in Africa, which was capable to present good financial profiles despite of the continuous inflation, despite the macroeconomic and geopolitical issues. We have to improve in terms of depths of capital markets. This is critical. We need to have more instruments in the capital markets. We need to have interoperability between banking institutions, between fintechs, and between insurance and the capital market. But this is through pragmatism, realism, that the financial industry will be able to manage this transition and this disruption to which we all aspire. So I invite all people just listening to me to upload the Barometer and to look at how the financial industry has evolved throughout this year.
It's a great report. We love reports on the show. And yes, we do encourage everyone to download it and check it out. Thank you so much for your time. Ramatoulaye Goudiaby, Director, AFIS, and of course the Jeune Afrique Media Group.